Hi, this is Ryan Sampson with Eschenbaugh Land Company. Just want to give you a quick market overview based on some of the comments we heard from John Burns Consulting. They track home building, build to rent, apartments, residential outlook. And so I attended one of their events last week and took some notes, so just want to share those. Essentially, mortgage rates surged in 2023 and 2024 to levels that hadn't been seen since the 1980s. They came out and said the magic mortgage rate needs to be 5.5% or less to have a psychological threshold for buyers today. So that's the magic number. We're seeing our home builders buy down interest rates to that 5% or less to make their home sales happen. Home sales are down from last year. Florida stands out with 4% down year over year in new home sales. So Florida and Texas are two of the softer markets nationally. On the multifamily side, we're oversupplied. No shocker in the Sun Belt markets. In 2023, there was a 50-year high of new apartment completions, which triggers today we're at a decade low of new apartments in permitting. So hopefully that will come back around once these apartments fill up and there's no new supply coming on market. In terms of build to rent, there was strong momentum going into 2022 and 2023. That has slowed drastically. There's still some developers out there converting for sale product into rental, but it's much tougher to get those deals financed. So current conditions, demand is flat. Traffic remains above average. Home sale pricing is actually down. Land and material costs are up. And the outlook is for new home sales to remain flat, though our home builders are saying that they are having increased traffic through their sales centers, but it's very price sensitive. And single family starts expect to be flat or down. Same with multifamily starts this year, flat or down. But hopefully there'll be some rent growth in the rental sector with the lower number of units coming on market. And then what's going to help us rebound is getting those interest rates down 5.5%. Multifamily being built in 26, 27, and then potentially a BTR revival. So short term, it'll be a bumpy ride. Midterm, affordability is kind of the inflection point that needs to recover, and then location matters, and Florida always comes out on top historically long term. So that's what we're seeing. Hopefully that helps. Those were our notes from the John Burns Consulting. If you have any questions about the market, feel free to reach out, dirtdog.com, or call us 813-287-8787. Again, Ryan Sampson. Have a great day.